My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sentiment can be hard to fathom, but it's essential if you want to predict the market's next move. For example, today's stocks word on information that might have sunk us at another time, maybe even yesterday. Dow this time surging 618 points, S&P pole vaulting 1.42%, NASDAQ rising 0.83%. Now, I talk about sentiment. I mean, what's the market's mindset? Sometimes it's about negativity and exhaustion.
The house of pain.
Other times, it's about exhilaration and wild-eyed optimism.
House of pleasure.
Today, it was about investors deciding their stocks have come down so far from their highs, it simply doesn't matter how bad the Omicron strain turns out to be. We didn't want to hear about it. Oh, they were willing to shrug off the news of a second Omicron case in America, even as stocks were eviscerated yesterday when we learned of the first one. Just as important, given that we'll likely be hearing many more infections, especially because the second victim had gone to a packed anime convention in New York City, investors now seem to accept the Omicron variant as just a new fact of life. Of course, if this strain turns out to be worse than Delta, and we start seeing a huge wave of hospitalizations or perhaps deaths, then we'll look back on today's bullishness as a temporary condition of insanity. Still, the first sentiments factor is pretty straightforward. We just had too much negativity. There just was. Stocks were overly hated, which made it easy for them to rally once we got a few bits of good news. A great quarter from Snowflake, a solid one from Okta, good news from CrowdStrike, which will be on later in the show. Secondly, relatedly, there's the oversold factor. Sometimes stocks go down so hard, so fast, that they'll overshoot and deserve to bounce. There's actually a way to measure this. I've followed the Standard & Poor's proprietary oscillator for years. It measures how oversold or overbought the market's gotten on a daily basis. The oscillator has a baseline of 0. When neither the bulls nor the bears are in control, that's 0. As it goes up, that means the market's becoming more bullish, or if you want to be pejorative, more euphoric. When the oscillator goes at +5, well, then you're getting into extreme overbought territory. And what you got to do is you got to lighten up a little. And that usually means you're in a, let's say, traders do that. We even do it for the investing club product, the charitable trust. If it gets to +10, then you have to sell aggressively. Sell. Because the correction is almost inevitable, but it very rarely gets there, very rarely. On the flip side, when the oscillator gets to -5, that tells you the market's oversold, and it's too late for you to sell. If you're patient, you'll probably get a better opportunity, higher price. That's where we were until yesterday. Then we got to -7, and -7, you have to hold your nose and buy something, because it means the market's become a coiled spring. And that's a big reason why I got more constructive last night. Now, even though the oscillator will no doubt start rising after daily today, it will still be in negative territory because it's a measure of an accumulation of days. In other words, there's no danger that the market's going to come in overbought tomorrow, even after today. We're still badly oversold. We're still okay. Of course, that's not the only way to measure the level of fear in the market. We've also got this volatility index, VIX for short. In just a matter of days, the VIX soared from 17 to 31, where it was last night. Now, that is a rapid change in sentiment. They call this thing the fear gauge, and when there's too much fear, you need to do some opportunistic buying. And that's what happened this morning as the VIX started to plummet. A high VIX like we had yesterday, coupled with a deeply negative oscillator reading, can make up for a ton of bad news. And look, when the whole market's successively negative, you can see some truly wild swings in individual stocks. Yesterday, as I mentioned, we got good numbers from a host of cybersecurity firms. Normally, you would have expected a lot of enthusiasm from the analyst community. Nope, they were just too scared. They were under this desk. We just got tepid buy reiterations and price target cuts. Not boosts, but cuts. And that's that uber unrelenting pessimism I'm talking about. And by the way, it's not worth listening to when people get that negative. Sure enough, when sentiment turned today, both stocks roared. The stocks roared. Now, I'll tell you, when you look at Okta and you look at CrowdStrike, we're talking about those, what will happen is tomorrow there'll be people who raise price targets. Why? Because people want to get involved again. They wanted to shy away. Now they want to be in. We saw the same thing the other day with Salesforce.com. They wanted to shy away. I think they'll be in tomorrow. CEO Mark Benioff delivered a true blowout quarter on every metric, but he did give you a modest forecast cut due to the rapidly strengthening dollar since his last forecast. Now, in a more positive environment, Salesforce would have been given the benefit of the doubt. Company's got a tremendous track record. We own this one for the Charitable Trust, and I told club members not to miss the forest for the trees. It was a fantastic quarter. No one cared. The stock got crushed. I felt like a clown. Today, though, the stock's come roaring back up almost $10, and I'm starting to look a lot smarter. Then there are the groups that have been folded, spindled, and mutilated, tattered groups like payments. Payments was a once-loved sector because it has little risk and is all about payment processing. Think MasterCard, Visa, PayPal, or American Express. Periodically, a group like this one gets into a real funk, usually because there's some interloper threatening their lucrative fiefdoms, and this time it's an outfit called Affirm. It's upending the credit card industry with its buy now, pay later platform. The idea that these huge companies could be felled by a relatively little $32 billion outfit like Affirm seems ridiculous to me, even as I like it. But when the market's full of negative sentiment, it's easy for investors to believe the worst. How bad did things get? Well, let's take the most cogent example. We had Dan Schulman, the CEO of PayPal, on the show 2 days ago. He told us an amazingly positive tale about Black Friday sales, not to mention his own buy now, pay later business, which is bigger than Affirm, possibilities for his huge digital wallet technology. You got the monetization of Venmo coming, and I thought, wow. But the market said, ugh. The thing is, PayPal stock had already plunged from 310 to 180. Maybe it was an ugh at 250, but at 180, not so much. Stock jumped 4 today, 4%. Nice. Final sentiment indicator. How about ridicule? Ridicule. Yeah. When you own a stock and it goes down, 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 you're subject to ridicule, or at least I'm subject to ridicule. Might not be a universal experience, but I take the hit so you don't have to. Speaking of ridicule, I felt like I was getting beaten up every single day for holding Boeing for the Charitable Trust. Waiting what for? For the Chinese government to grant approval for the 737 MAX to go back in the sky. China finally came through this morning between, say, I think it was like between, say, 5:45 and 6:45, and bingo! Stock flew from 188 to 202. It's not done. Now, when the market's overbought and you get that kind of move, normally you would sell some Boeing. But when the market's oversold, as it is now, I think tomorrow people buy it. I think you get upgrades, you get re-it buys, you get target price boosts. That's what happens. Don't forget, Honeywell and General Electric have both been laid low by Boeing's pariah status. They've got a lot of hardware in these planes. Both stocks can rise on this Chinese news, even if it doesn't immediately translate into orders. Sentiment's a fickle beast, people. After a terrific day like today, some people will jump to sell stocks because they feel like they've gotten lucky. What you need to consider is that there are many others who are waiting for the selling to stop so they can go over the top and start buying. And that's where we are right now. Now we had a big disappointment tonight in numbers from DocuSign. But you know what? It may not matter because now that's viewed as a pandemic play. And the pandemic, we're avoiding it for now. Bottom line, hold tight. Higher prices could be in the cards for the down and out stocks that have suddenly and incredibly, despite the Omicron backdrop, been given a new lease on life. David in New York. David.
Booyah, Jim.
Booyah, David.
First-time caller, lifelong fan.
Excellent.
So I've had my eye on starting a long-term position with a rideshare company, most notably Uber. Uber continues to expand its reach with food services, cannabis ordering in Canada, and now a new him and hers delivery partnership. Both Uber and Lyft stocks have been pretty beat up over the last month with COVID variant talk. Is now the time to get in one of these, or is the space still too volatile?
Thought about this all day because someone came out with some huge price target for Uber. I think Uber did get too cheap, but it's at 38. It's up $2 today. It does matter. I think go to 45. That's a trader stock, though. Uber is a trader stock and no more right now. Steve in Minnesota. Steve.
Hey, Jim, it's Steve from Bloomington, Minnesota.
Excellent.
I'm calling about 5-9. You had the CEO on the show a few weeks ago, and I thought it sounded intriguing. But since I bought a few shares as a starter, it's taken a big plunge. Should I keep holding, or should I buy some more?
I would keep holding.
I
mean, 5-9. Look, these stocks. It really wouldn't matter which one you bought. These were all trading as a cohort. It got hammered. The company did much better than expected. You're going to get probably another really, really good quarter. Now, longer term, we have to check about that technology. But right now, for the next year, I think you're fine. Michael in California. Michael.
Hey, Jim. How are you doing?
I am doing well. How about you?
I'm doing well. Wanted to first thank you for providing good advice during the past 2 years while I've been at home.
You're
and
welcome.
You've been conducting some awesome interviews with some of the top CEOs as I continue to get my MBA.
Thank you, man. Hey, thank you. And a young person getting an MBA, I got to salute you. Thank you.
Thank you. So you have helped me become a better investor. So I have a question for you, Jim. As of yesterday, AMC had a pullback of 15%, while Cinemark had a 2% decline. Yet volumes for AMC are significantly lower than similar larger directional moves that occurred in June or July. At the same time, AMC, per the press release, has had the biggest day of ticket sales for a single title since reopening, and the second biggest of all time with Spider-Man No Way Home. My question, Jim, is due to yesterday's drawdown of AMC's price crossing the 200 moving average, it would appear to me that this would be a good buying opportunity based on technical and fundamentals for the month of December.
Well, the fundamentals are, they're fine. The technicals are not good. There were people who were unhappy to see insider selling. There's a cult or a cohort of people who own AMC, and they're horrified that the stock's going down. They will continue to buy it all the way down if they have to in order to keep the balls in the air. That's what they do. It's not what I do. It's what they do. Adam Aaron's done a very good job of keeping the balls in the air with them. All right. Higher prices could be in the cards for the down-and-out stocks that have suddenly been given a new lease on life because of the suspension of negativity. For now, on Mad Money tonight, CrowdStrike bounced today after reporting a top and bottom line beat for the third quarter, and I'm seeing if the company can continue to defend itself from the bears with the CEO. Then Allbirds recently hit the public market and has since been trampled on by Wall Street. I'm trying the newly listed stock one for size to see what you should make of all that selling. And Signet has soared this year, but after pulling back today. Are investors getting a buying opportunity in the jewelry kingpin? I've got the company's top brands. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.